Good morning and welcome to Economy and Markets, where we give you a comprehensive overview of activities shaping our economy and also the equities market. Before we go into rundown for last week, we're going to go with some business news making the rounds. Before we do that, we are spotlighting the Nigeria Tax Act today on the show. And before we do that, let's go into businesses making the round. We see GTCO is set to raise $105 million from his London Stock Exchange share offering. The group is going to sell 2.29 billion new shares at a reference price of 17 naira per share on the London Stock Exchange. Is aiming to raise $105 million. This equity offering is part of GTCO's upcoming listing on the LSE that is set for Wednesday, July 9. The accelerated book build process was targeted at institutional investors in the UK, the US, and some select markets. It concluded on July 3rd with bids exceeding the $100 million target. After the raise, the group's paid-up share capital is going to rise up to $508 billion, surpassing the regulatory minimums, while its outstanding shares will hit $36.43 billion. At the current price, GTCO's market capitalization is set to exceed 3 trillion naira. As part of the listing plans, the bank will delist its global depository receipts that have been listed on the LSE since 2007. Then ordinary shares will begin trading on both the NGX and the LSE from July 31st. Nigerian banks are set to resume international transactions on Naira cards. Commercial banks have now said they are going to resume international transaction on Naira debit card after a multi-year suspension that was driven by FX shortages. UBA, Wema Bank, GT Bank have made separate announcements to their customers confirming the return of these services. UBA stated that all its premium Naira card, including the Gold, Platinum, and World variants, are now enabled for global transactions across ATMs, POS, and online platforms. This means, according to the statement they released, they say this means you can now use your premium Naira card for everyday payments across the world with more ease and flexibility. Wema Bank also echoed this update, saying its Naira MasterCard is now accepted for dollar payments on platforms like Amazon, Netflix, and AliExpress. This move comes nearly 3 years after banks halted foreign transactions on Naira card amid FX constraints. The resumed services basically reflect improved FX liquidity and growing demand for cross-border payment. Then we go to Afrexim Bank, as we've seen Moody's downgrade Afrexim Bank to a Baa2 over weaker asset qualities. Moody's Investor Service has downgraded the African Export-Import Bank's long-term issuer and senior unsecured ratings to Baa2 from Baa1, citing weaker asset performance and growing capital risk. The outlook was revised to stable from negative. However, the downgrade reflects the bank's increased exposure to high-risk sovereign lending, particularly to Ghana and Zambia, where debt restructuring is now posing potential losses. Moody's noted that the bank's pivot from trade finance to unsecured foreign lending has heightened its vulnerability to economic headwinds. Additionally, Afrexim's traditionally strong funding profile has eroded, with limited access to market-based financing, despite recent Samurai and Panda bond issuances. Liquidity, however, remains robust at $9.5 billion, that providing a cushion against short-term pressures. The stable outlook balances risk, supported by Afrexim Bank's solid profitability, shareholder capital injections, and adequate provisioning. Moody's said an improvement in asset quality and funding assets will trigger an update, while further deterioration may lead to another downgrade. Then we move to Ella Lakes, where we see that Ella Lakes has appointed Hewett Benson as their new Chief Financial Officer to drive their growth strategy. The bank has appointed Hewett Benson as its new CFO effective July 1st, 2025, as the company is advancing its transformation into a leading agro-industrial player in West Africa. Benson is an accomplished finance executive, and he brings a global career spanning capital markets, asset management, and corporate transformation. His experience across developed and emerging markets position him to strengthen Ella Lake's financial strategy, capital structuring, and commercial execution. He's recognized for leading large-scale transformation projects and raising capital across debt and equity markets. He's also worked in asset-intensive industries. Basically, his appointment aligns with Ella Lake's 250 billion capital raise and broader strategic ambition. The CEO, Chuka Mordi, described the appointment as a timely move to reinforce the company's leadership during a critical phase. He holds degrees from the Imperial College London, the University of Cambridge, and MIT, and is expected to play a key role in delivering long-term value for shareholders. Then finally, we move to the foreign scene, where Donald Trump is set to notify 12 nations of new tariff as the July 9 deadline nears. Major US trading partners are scrambling to finalize trade deals ahead of a July 9 deadline, as President Donald Trump prepares to notify about 12 countries of new tariffs. Over the 4th of July weekend, Trump said he had signed letters detailing tariff levels and amounts set to be dispatched on Monday. While the targeted countries remain unnamed, negotiations continue with Japan, South Korea, the EU, India, and Vietnam. Basically, this is in line with Trump's tactic of issuing on unilateral threats at critical stage that has left uncertainty about whether the letters are genuine or leverage. Countries like Vietnam and India are still negotiating details, while South Korea is seeking a deadline extension. However, European officials have signaled a near final agreement. The looming tariffs come as the US stock market hits record high, although analysts warn that they could reignite fears of a recession and spark retaliation. A 90-day tariff freeze on over 50 countries is set to expire this week, on Wednesday more specifically. And after the break, we return with an update from the equities market last week, which closed flat on Friday.
Good morning and welcome to the BDTV Breakfast Show. I am Bethel Obajabi.
My name is Elizabeth Musa.
And this is the social listening segment on the BDTV Breakfast Show.
We're talking about the Fly Nigeria Act. Can you give us a background into what this is about?
We are here today on the streets of Lagos, Nigeria, to gather opinion about a pressing issue.
I go look at the cost of petrol. We get very Nigeria with the suffer.
The income is not really increasing, but the prices of items are increased.
Nothing like service again. No. You only pray for that money to reach you that month.
There's a lot of high pressure, a lot of stress. There's a lot of high targets to be met.
I was quite strict. In my mind, I said, moving from my hand, my picking go spoil.
And we're back, and now we're going to the equities market. The NGX on Friday closed flat as the market was up around 0.01, basically 12.46 points. The all-share index closed at 120,989 points, continuing its year-to-date rally of 17.55%. Market capitalization hit 76 trillion, basically continued its rally. We see 76.339 trillion. Then on trading, in terms of trading statistics, we see our total traded volume around 923.9 million shares, traded value around 11 billion shares, 11.003 billion shares, market cap 76.34 trillion. Modest daily activity, we just saw some less than a 1% decline in volume from the previous session. However, value was significantly down, as a lot of attention on Friday shifted towards lower priced stocks. Basically, a lot of, unlike on Thursday where we saw a lot of action on stocks like GTCO, Access Holdings, we saw more action on lower priced stocks on Friday. Amongst our top gainers, we see leading the charge, we see Champion Breweries, 13 naira 20 kobo, one of the top gaining stocks of 2025. It continues its rally as it went up 10%. We see John Holt, 7 naira 70 kobo, another 10%, another full beat stock. Red Star Express on Friday closed at 8 naira 37 kobo, gaining 9.99%. Academy Press gained 9.98% to close at a share price of 6 naira 17 kobo. Then we also see UPDC. UPDC also gained 9.98% to close at a share price of 7 naira 47 kobo. Basically, market sentiment is suggesting that retail investors are snapping up mid-cap names after likely attracted by their bargain valuations. On the downside, we see Ella Lakes, after a full almost a month of rallying, go down 10%. Ella Lakes went down 10%. PZ Cousins also down 10%. Ella Lakes closed at the share price of 8 naira 10 kobo. While for PZ, we see that the share price of 32 naira 40 kobo. Then for Japal Gold, we see Japal Gold go down 9.70% to close at the share price of 2 naira 70 kobo. After the break, we return with updates from the market. In terms of top traded stocks during the week, we saw quite, like we said, a lot of investor sentiment on mid-cap, lower-cap stocks. We saw Japal Gold, 147 million shares. They record a trading value of 421.6 million naira in a trading value of 421.6 million naira. Then we also go back to Coronation. Coronation, that's WAPIC. We see WAPIC 44.5 million shares, a trading value of around 94.6 million naira. Basically, all the stocks that were the top traded on Friday, we see a lot of action on those smaller stocks, or sometimes we call them penny stocks. Access Holding was the we'll say was the outlier in this case. Access Holding is 43 million shares, trading value of 984 million naira. Then Consolidated Hallmark PLC, Consolidated Hallmark Holdings, 42.8 million shares, in terms of value 122.4 million naira. Then Charms also appeared on the top traded list, 42 million shares, to record a trading value of around 107.9 million naira. In terms of our weekly market reports, we see the NGX also rally. In our weekly market reports, we see 0.83, the all share index gained 0.83 during the week. It rose by around 993 points, 993.90 points, to close at what was our all share index, to close at the all share index of 120,989.66. Pardon the error on your screen. Then our weekly gainers for last week, for all of last week, Mayer PLC Paint Company gained 60.11% to close at a share price of 14.65 kobo. That's such a huge gain in just a week, 5 days of trading, 60% return. RT Briscoe, a logistics company, 50.83%, 3.65 kobo. FTN Cocoa, there's been a lot of buzz around cocoa this year, and in fact last week there was more buzz on cocoa and FTN Cocoa itself, considering the fact that a lot of move is being taken to move Nigeria to make Nigeria almost double its cocoa output. Nigeria is looking to produce 50% more cocoa than it did last year. We saw share price of FTN Cocoa move up by 40% to hit 4.67 kobo. Then International Energy Insurance, now owned by Northern Badger, went up 35.43% to close at the share price of 2.37 kobo. And we see UPDC 34.66% to close at the share price of 4.74 kobo. Basically, all lower tier stocks, a lot of action on lower tier stocks. Then in terms of our losers, PZ Cousins went down 14.96%. To close at the share price of 32 naira 40 kobo. After return to profitability, we've been seeing a lot of investors take their money out of that stock for reasons that maybe considering the fact that they are not paying dividends. It's not a dividend paying stock. They still have a lot of retained losses that they have to offset. Julius Berger, the construction company, was down 9.97% during the week to close at the share price of 112 naira. SCOA Nigeria, 9.83% to close at the share price of to record a share price of 4.86 kobo. Then VFD 5.41%, stood at the share price of 14 naira. HM Call, that is Halden McCall, which is one of the most recent listings on the exchange, down 4.76% to close at the share price of 4 naira. In the international, when we talk of sectoral performances, before we go to the internationals, in the sectoral performance, the NGX Banking Index was up 0.12%. During the week, Insurance Index was the top gainer, up 5.86%. Consumer Goods Index up 4.08%. There's been a lot of action on those two spaces, insurance and consumer goods. Insurance, for the basic fact that a lot of lower tier stocks are insurance companies. This has been the most weekly gain we've seen on insurance stocks in the market this year. Consumer goods 4.08% up. Oil and gas was also up 77%. They are trying to offset a lot of the losses that they've recorded. Even despite the gains, NGX Oil and Gas Index is still down by around 9.2% this year. Industrial Goods Index up 2.11%, as we saw quite a bit of action on lower tier industrial goods stock. Then we move on to the international scene, where we saw 4th of July was Friday, so there was no trading in the US space. However, from Thursday's trading, 3rd of July, we saw all the indexes up. We saw US Dow Jones up 0.77%. The S&P 500 was up around 83 basis points to hit a record high. That's the record high we're seeing on the screen. The Nasdaq Composite was also up over 1 percentage point to hit another record high. It's been on record highs. We have record highs after record highs. Then on Friday, we see Nikkei from Japan up 0.06%. Kospi down by almost 2 percentage points. That's the Korean index. Then Hang Seng, Hong Kong, down by 64 basis points. Then in Europe, there was a lot of flat closing. The FTSE 100 closed flat. However, the CAC 40 closed 0.75% down, and DAX index also closed 0.61%. Then on the currency side, I would use the word someone used. They say the dollar is melting against the naira. I don't know how true that is, but what we can see is that the naira is making progressive gains against the US dollar, both in the parallel market and in the official market. Last Friday, the USD Naira NGN exchange rate closed 1,530 naira. That's the highest we've seen. That's the highest level the naira has gotten to since I think this has been since April this year. The Euro NGN is 1,802 naira. Then in terms of GPB, that's the British pounds, 2,089 naira. Then that's all we can take on the equities market. Now we are shifting to economy and market, where we break down big moves shaping Nigeria's future. On the show this morning, we are diving into the Nigeria Tax Act 2025, or what I'll call NTA 2025. We're not talking about NTA now, we're talking about the Nigeria Tax Act, which is a sweeping piece of legislation that is promising to reset how we think about taxation in this country. Let's recall that in August 2023, the president inaugurated a committee, which he called the Presidential Committee on Fiscal Reform and Presidential Committee on Tax and Fiscal Reform. The committee was set with the responsibility of recalibrating the Nigerian taxation system. So after over a year and 18 months, they were able to come up with pieces of document, 4 sets of bills that have been merged into one, known as the Nigeria Tax Act, consolidating Nigeria's tax law into a single unified framework. That law is aiming to simplify compliance, boost revenue, and eliminate confusing overlaps. And now on the show this morning, some of the features of that law include the fact that income tax now applies to profit earned by companies, individuals, trustees, and even estates. Digital assets like crypto earnings, online winnings, and grants are now also part of income. We are now part of what is classified as income. But one thing here is that, for example, losses from digital assets can only be used to offset profits from the same asset class. The Act also redefines some key terms like interest, which now includes foreign differences and derivative payment. Dividends now include capital payout from companies that are being wound up. And royalties, that now includes payment for any right to use or exploit any property. So basically, to tackle tax avoidance, two big ideas are also entering this conversation. First, controlled foreign cooperation rules. This controlled foreign cooperation rules means that offshore profit may be taxed in Nigeria. That's for companies, for corporations in Nigeria that control corporations abroad that have some offshore assets. They say profit from some of those operations can be taxed here if they are not distributed. Then secondly, there is a 15% global minimum tax that is aligned with the OECD's BEPS framework. So if a Nigerian multinational foreign subsidiary pays less than 15% tax, they will top up that difference here at home. Basically, if they pay less than 15% tax in the country of operation, let's say the GT Bank in Uganda or in Kenya pays less than 15% tax in Kenya, they are going to pay the remaining upwards to that 15% here at home in Nigeria. For foreign companies that operating here, the rules are also tighter. Basically, only expenses that are tied to their Nigerian income can be tax deductible, these are some very interesting conversations. And they say if the taxman can't figure out your real profit, you pay at least 4% of whatever you made in Nigeria. Basically, if your profit is so we have a lot of non-listed companies who are not under regulations to actually give us a full breakdown of their statement of profit and loss and statement of cash flow statement and things like that. They are also saying no more reasonable or necessary expenses. It is now strictly about being wholly and exclusively for income generation, plus foreign expenses only deductible at the CBN official exchange rate. What does this mean? If a company spends $50,000 on an expense and they claim in their financial statement that they made this expense at the parallel market rate of 800 naira, or as we had it in the past, 1,600, 1,700 naira to a dollar. What this law states that foreign expenses are only deductible at CBN's official exchange rate. Capital allowances have been simplified to no more initial allowance, and pro rata only kicks in if 10% of your income is tax-free. I've said a lot about the law. I've said a lot about this particular act today, but on the show this morning, we have Jedidiah Oyineye, who is an associate at North and Templeton Attorneys. He's going to be providing some insight into what this law implies for businesses, both great and small. Good morning and welcome to the show.
Good morning, David, and I'm happy to be here.
Thank you so much for being here. It's a pleasure having you. So, as from your perspective as an attorney and esquire, what can you say is the core goal of this law, of this act for businesses in Nigeria?
All right. I would allude to the principles of taxation by Adam Smith in his book, The Wealth of Nations. He says there are some core principles. So we have economy, we have equity, we have convenience, and we have certainty. So basically, what this law is doing is to create a corpus from all the different laws that are already in existence. Not literally, there are not 1,001 laws, but there are many laws that involve taxation. From even the Petroleum Industry Act, we have VATA, we have Capital Gains Tax Act. We have many of them, and a lot of these things have caused conflicts in the past. For example, the one that's even very common is the VATA, where you have cases like AG Lagos and Nicole, where they say, okay, yeah, Lagos State is taking consumption tax or sales tax, and then federal government is taking VAT. So, okay, please, who am I supposed to pay to? Like, you're taxing me 2 times. And I say, no. The authorities are saying, no, this is not double taxation. They are taking their own, I'm taking my own. And then there are also certain, you'd call it interpretation, where somebody is saying, no, the federal government is covering the field because this was not yet in play. But you see, what this law has done is to make sure that, all right, enough of all these things. Let's bring everything together. Let's make it very, very easy. At least, first of all, taxpayer must know what they're supposed to pay. Certainty. The next thing is convenience. And another thing is economy. Like, imagine you have to pass 5, 6, 7, 8, 9 laws just to collect taxes, and the tax is going to just one place.
One place.
It doesn't really make any sense. So let's just harmonize this whole thing, and that's one thing that has done.
For small businesses, I've also had this challenge of I tell people a lot that one of my issues with Nigerian tax system is the fact that I feel like small businesses are some of the most taxed. And this taxation system there's a lot of illegal taxes that we're dealing with, and so how does this play out for them? How do you think that this tax law is able to help us deal with that issue?
Okay, so first of all, illegal taxes is one thing, and then multiple taxation is another thing. But you see, what this law has done is that it's basically defining what a small business is and saying, all right, guy, if you don't turn over up to 250 million. No, 100 million, I guess.
Yes.
If you don't turn over up to 200 and your fixed assets are not up to 250 million, if you don't turn over 100 million, all right, you are a small company, and then he exempts them
from a level
entirely
of tax.
From, you have the CIT, it exempts them from CIT, from capital gains tax, and some other taxes. So this is actually a very, very big deal. Why am I saying this? According to Money Points, I think that was in 2024.
Yes.
96% of businesses in Nigeria fall under MSMEs. And last week I was watching the news, and the director of Smedan says that now we don't just have MSMEs, we have nano,
yes,
medium, small, and all those ones like that. So a lot of businesses. So basically, just like we are saying, 96% of businesses in Nigeria don't have to pay company income tax, and that's a very, very great achievement that I think the federal government has been able to come about.
Okay, after the break, we'll return with this conversation.
I am, of course, a great admirer of the impeccable credibility, professionalism, and business savviness of businessmen. If you really mean business in Nigeria, start your day with businessmen.
Business.
So we're back to Economy and Market, and on the show this morning I have Jedidiah Oyinleye, who is a lawyer at Northern Templeton Attorney. So we're coming back to our conversation. The question now is, what is in this for small businesses? How transformative is this particular law for small businesses in Nigeria?
Yeah, all right. So we already mentioned that 96% or thereabouts of businesses in Nigeria are classified as small businesses. So basically, you're exempting 96% of businesses from paying company income taxes, which gives them leeway to fail fast, to do a lot of things, and not bother about, I need to file. You need to do filings, but then you don't necessarily need the services of a very, very expensive
tax
consultant or something like that. And another important thing is, last week I was communicating with one client, and I asked, why have you not registered your business so far? I said, if I register my business now, I need to do
tax returns.
TIN, that's TIN, or tax pro max, right? And then they will bring bills. I'm like, okay, even though that's not how it works, but then that's basically what a lot of people
small businesses,
of small businesses out there, they feel like, no, if I register now, they're going to be pursuing me with best of judgment and all those things like that. So now small businesses can actually remove all those from their minds, and of course it also allows the country to focus on 96% of businesses.
Yes.
So now you don't have people in the informal sector again. Now you're bringing them, and okay, so what do they need? Because for an economy that wants to grow, for an economy that wants to burgeon, you need to focus on those people that are like the majority of the businesses that are
in the country.
In your country. So that's one very, very huge thing.
So one question that this thing is bringing up in my head is around the fact that we are talking about small businesses making up 96% of the economy. Do you think this is enough incentive for people to now start taking the route to officializing their business or formalizing their business, registering it with CAC, getting their TIN, and even being able to enjoy some of the tax credits that may be afforded to them within the context of this new law, this NTA?
Yeah, I believe so, because you see, because I deal with a lot of clients, and you see some of them tell you that I don't want to do company registration, I want to do business name registration because I will not pay tax. So basically, they have an idea that there is regulatory requirement, or there are regulatory requirements
for registering your business. For
registering your business, for even incorporating as a company. So they choose the easier way out because they feel like nobody's going to tax me if I use a business name. So you see somebody with a lot of assets even entering 50 million, 100 million, a person is still using a business name because they are scared that
if I go further,
they get registered, they're going to come with a big cane and say, yeah, bring your 30% of this, bring 30% of that. So this way, I think it is a way to encourage people that, no, guys, don't worry, do business. You are free to do business. Don't worry, it's only VAT you are paying and some other ones there. Don't bother. Just do it and don't be scared of anything.
Okay, so now for large corporations, there's a lot of, first of all, large corporations may get a 30% CIT. That they say it may drop to 25%, yes. Then there's also a 4% development levy, but they get what is called the annual EDI tax credit for every capital expenditure they make. How does this make, what's the difference between what we had in the pioneer status incentive and this EDI right now? Because it looks like a lot of the tax burden is going to be carried by our big boys in the country.
Exactly what I wanted to say. You see, if 96% of the country is not paying CIT, somebody has to pay.
That's our big boys.
So the big boys, the 4%, you need to pay now. Whether it's just and equitable, it would leave it to the people that study philosophy to teach us about
the people that study the law.
But as of now, the big corporations are the ones that actually have to pay. But you see, we're saying that you're paying 30%. Cool. But it might drop to 25%. That's actually a step in the right direction. Now we're even saying you have 5% tax credit. So before, what we had was pioneer status incentives. So it's basically for organizations in some set industries. So for example, the ones that the NIPC,
yes,
the Investment Promotion Commission, says, all right, we classify this as pioneer industries. So because they are pioneer industries, you only pay, you don't even pay, you have tax holiday. Now, imagine that 96% of the businesses in Nigeria, they are not paying taxes. And then you are still giving 5-year tax holiday because it comes 3 years first and then you have 2 years subsequently and probably 1 year or something like that. So imagine that another 4% of the tax nets don't pay because they have tax holidays. Where are we going to get
that's it. Now when you put it that way, it brings a broader context to it. Now it begins to, because I heard there was this particular event where we had this particular event with Taiwo Udili, the brain behind all of this, and he talked about the fact that MTN in their first year of operation in Nigeria, they turned over, they broke even in 6 months. Zero taxes, and in a year they had like $350 million of revenue. Repatriated it back to South Africa in just a year of operation because of the pioneer status incentive that they enjoyed in Nigeria at the time. Yeah. Okay, it brings a lot of. So now another question that is that this NTA, I like to call it NTA, yeah, sure, because is the part around the foreign controlled corporations. They say there's now a 15% global minimum tax. So basically, if we have Dangote Cement go to Ethiopia and it pays maybe 5% taxes, he will pay the remaining 10% in Nigeria. What's your thought on that? Will it encourage more Nigerians to start looking to dominate Africa? Because in the past few years, we've been seeing Nigerian corporations saying we want to. Nigerian corporations have begun to try and make some move. Most recent one is Zenith Bank trying to acquire a bank in Kenya. Yes. So what do you think? Will it encourage, or do you think it's just everybody will move on and get over with it?
So I first of all feel that we must still remember that we have a 96% deficit somewhere.
So
and it has to be
come from somewhere.
From another place. That's reality. But you see, this provision within the NTA is not because of Nigeria. It's an OECD principle that is widespread. Every forward-looking country, every forward-thinking country applies this. So basically, countries can't, keep their, what do I call it now? Countries can't avoid taxes. I would let you know the dictum of Lord Tomlin in the case IRC versus Duke of Westminster. So in that case, my Lord said, no organization, no person has a duty to pay more than he ought to pay. So basically, it says if you can legally avoid to pay taxes, please go ahead, right? So yeah, that's the law, right? So what the law is now doing is to make sure that, okay, I will make sure it's hard for you
to legally avoid
taxes, because truly it's actually an ethical duty. If you are using our people to build the organization, you should
to
pay
make
it forward.
money for yourself.
You should pay it forward in one way or the other. So we have the 15% there that says, all right, you are repatriating a lot of your income to Belize, Abi.
Yes.
And Belize probably they have just say 4.5%, no wala, and the remaining 10.5% you pay it here. So to prevent things like also not prevent actually, because you can't prevent tax avoidance, but to stem it, to reduce it, and to make sure that we still get these monies back.
The question now you mentioned something about tax avoidance, because now we're going to be, I feel like a lot of accountants are going to have very good jobs. Accountants and lawyers, attorneys will have good jobs these days figuring out how to, because one thing I've always known around taxes is tax laws is that there would always be, it creates another system of opportunities, employment opportunities
certainly.
For people to to know how to circumvent the rule.
Certainly.
Finally on our question, we're just talking about the VAT e-reporting. Do you think Nigerian businesses are ready for VAT e-reporting? They said there's a lot of, now businesses have to, there's this whole thing around VAT these days. I think the government is trying to be very big on VAT. So how do you think Nigerian small businesses are prepared for this shift? Everybody's now talking about 7.5% VAT. If you buy food from, let's say, the local booker now, are they ready to come up with 7.5% VAT?
And so we need to look at this very, very fairly. To say businesses are not ready for fiscalization or e-invoicing, I don't think it might be a little bit far from the truth, because a lot of businesses now use POS to take their monies.
Okay.
So if you use POS to take your money, it's just an API away from reality. The federal government has to work with the big boys, the Money Points, the OPays, the PalmPays, Global Accelerex and all. So you guys, this API, just add it to the machine that you already have.
The online transactions we even already have 7.5% VAT.
So it's not far-fetched, in my view though. It's not far-fetched. It's something that can happen. And you must also remember that these businesses we're talking about are already exempt from CIT. So something must give.
Something must give for something.
Something must give, you understand? So you shouldn't complain about fiscalization of VAT when you're not paying CIT anymore. And the reason why we are saying, don't pay CIT is because we want you to, thrive. Now, when you have finished thriving, what are we going to collect from that?
From your hand. All right. Thank you so much, Mr. Jed, for your time on Economy and Markets. It's been a lovely morning on E&M this morning. To our viewers, thank you for sticking with us. Good morning. I'm your host, David Olujimi.